Good afternoon. This is Tom Asprey with the Viper Report. It's Wednesday, October 23rd. Lots of big names report earnings this week. Here's a slight sampling of what's happened. These charts are up to about 2:30 in the afternoon. Boeing, of course, got hit hard late last week, and the sell-off continued Monday. Then it actually reported better than expected earnings this morning and is up on the day, though it's given up quite a bit of its early gains. You can see it got up to almost 350, now at 337. Caterpillar was one of the few bright spots. Even though it missed badly on earnings, it was down sharply, but currently has rebounded back to the upside. That's the kind of action you'd like to see if you're long the stock. Not so nice for Texas Instruments. You can see the huge gap lower. You can almost barely see where we're trading now. We were up near 130 yesterday, and now we're down around 117.5. The volatility and danger in earnings season is really apparent with Chipotle. CMG reported stellar earnings yesterday after the close, rallied sharply in the after hours, and is now down 5% on the day. You can see that it gapped lower also, breaking all this support going back to the middle of October. And lastly, McDonald's also has had a rough week. You can see it gapped lower also on Tuesday and has continued to the downside today. As those of you who regularly follow my video updates know, I place primary emphasis on determining the market trend on the advanced decline analysis, the 6 AD lines that I follow. They're all still positive, though they have lost some upside momentum. There are several other indicators that I use to gauge the strength of the market. In the last video, we talked a little bit about the HighLow Analysis. This is a measurement of the number of NYSE stocks making new highs and the number of NYSE stocks making new lows. It can tell you both the strength of a rally as well as how weak a decline is. This chart is back from late 2017 to early 2018. We had a dramatic rise to the upside. 2017 was one of those years that my analysis stayed bullish throughout the year, but most Wall Street analysts missed their targets by 300 or 400 S&P points. As we continued into early January, you can see the market was very strong, but the number of new highs peaked early in, and then as the market was continuing to make new highs, it was making lower highs, and in fact topped out one day after the high and started a waterfall decline. Below that, you see the number of new lows. The surge to 204 was a sign of weakness that alerted traders that the extreme overbought condition could now be met by heavy selling. The surge in the new lows as the market continued lower was a sign of that heavy selling pressure. Oftentimes at major turning points, the HighLow analysis can be just another factor in confirming the view that the market has formed an important bottom. That was the case in early 2016. We had a sharp decline into the middle of January. The number of bullish investors dropped to under 20% according to AAII at this initial low, line 1. We had a nice rally into the start of February. Another decline, new lows in February, this line 2. And at that point, once again, the bullish percentage from the AAII survey was quite low, but you can see what happened to the new lows. New lows peaked in January, and then on February 11th, there were many fewer new lows, indicating that the market was getting sold out. And also there was a nice surge in the number of stocks making new highs. That suggested that the worst of the selling was over. In addition, the AD lines gave bullish signals, as did the McClellan oscillator. I'll be conducting a new video lesson on Saturday at 11 a.m. Eastern, 8 p.m. Pacific. The meeting details are in the email that accompany the video. Hope you can tune in. There's also a survey there. If you haven't filled it out yet, please do so, because I use those surveys to determine the material that I cover in these free video lessons. A majority of you want more analysis on charts, so that's what we'll be concentrating primarily on today, as well as I'll give you an update on the market's internals in that report. They only run about 30 minutes to 45 minutes. I like to keep them short. So I hope you can tune in and join us. We have about an hour and a half of trading left in Wednesday's session. You can see the Dow has been all over the place. It was up here at 26,894 in the morning. Now it's down at 26,750. Most of the major averages are down slightly, but it is a good sign that at this point the AD numbers are still positive, 696, 1239. If you're interested in getting involved in the markets, I hope you'll consider one of my premium services. You get 2 reports a week. Each service is $34.95 per month through PayPal, and you can cancel online at any time. The Viper ETF report or the Viper Hot Stocks report. If you go to viperreport.com, you'll see these links and hope you'll sign up. Once again, hope you can join us on Saturday for another free video lesson. Have a good week.